two will delay getting to the last part.
Okay, you guys are live, good to go.
All right, thank you. So it is 5:04. We'll get started. This is the investment committee meeting for the town of Dewey Beach. We've got our agenda, which is in the materials available on the town's website. First item of business will be the roll call. Brian Prevor, chairman. Jimmy, you're on mute, but I can see that Jimmy Lee is here.
All right, I'm here. Thank you.
Thank you. Bernie Kraus. You're also on mute, Bernie.
I know how to find it. Everyone is different, it seems.
It appears that we are missing two members, but we do have a quorum. Dennis Trencher and Mike Schaefer. Hopefully they'll join us. Commissioner Gibbings.
I am glad to join y'all again.
Thank you very much. We're glad to have you. And looks like we have Dominic from Brown Advisory. Sheena Hall from the town, Bill Zolper from the town. Great. All right, well, why don't we get started? First order of business will be to vote to adopt the agenda, which you have out in front of you. We have a motion to approve the agenda.
I'll motion to approve the agenda.
Do we have a second?
I'll second it.
All right, all in favor, I'll say aye.
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 Aye. Well, there are no others, no nays available. So I think that passes unanimously. We need a secretary to record the minutes. Bernie, do you mind stepping into that role again? Thank you. Next item of business is to review and vote on approval of the last meeting's minutes, which are also available on the town's website. Has everybody had a chance to review the minutes? Do we have a motion to approve the minutes, or well, before we do that, are there any changes or edits that anybody wishes to make? All right, hearing none. May we vote to approve the minutes from our previous meeting?
Approved.
Do we have a second?
I'll second it.
All in favor, say aye. Aye.
Aye.
Aye.
And it passes unanimously, so we're moving right along today. Next item on our agenda is the town manager. If we could hear from Mr. Zolper. If you can give us just an update, this is not the budget committee for those in the audience who are listening. That's probably the more appropriate forum for more detail, but it's helpful for our committee to hear the needs of the town so we understand the basis for making recommendations for the investment portfolio. So Bill.
Yeah, thanks, Brian. Appreciate it. Sheena Paul's been a huge help with the finances since I started over a year ago. Couldn't do it without her. Right now, the two big items that we are looking for investing in for funding is, of course, our new town hall / police station, which we think will be anywhere between 4.8 million. And if inflation still right now at 11.5% continues to grow, it could be possibly up to $6 million for the new building out on Route 1 where code enforcement is now. The other large item that we're looking at, and we'll be continuing to look at into the future for years after I've left, is infrastructure and stormwater system and the end of our roads that go into on the bay side. So right now we're in a project of about $480,000 approved by the infrastructure committee, and that is to realign the pipes along Bayard Avenue, McKinley Street, and on Reed Street, and the outfalls on Reed Street. That was the worst case scenario, the 480. It's going to be somewhere between probably 375 to probably about 425 for the complete work, since we're not going to have to replace all the pipes. We are going to be able to reline some of them, but then some on McKinley Street will have to be replaced. So those are the two big items that we're going to need investment and funding for. I'm happy to answer any questions.
One question on the town hall budget. That's the total construction cost, I presume. You're not required to have all that money available instantly, correct? In other words, you could essentially borrow for construction, or do you have to have all the cash available?
No, we won't have to have all the cash available. The mayor's looking into several different ways of either borrowing the money. And the other thing we've done is we've gone to Senator Coon's office and Senator Carper's office and asked for grants, both offices through the appropriations committees when they meet. Got a 10-page application for each office, letters of endorsement from community leaders, letters of endorsement from our commissioners, state representatives, and business owners here in town. Editorial from the Cape Gazette. Also, we got both of them in the day before the deadline. We went over both of them with representatives from both Coons and Carper's office, and they said they were done exactly how they needed to be done. So that's another funding mechanism there. And then, as I said, the mayor's looking at a couple different options.
That's great. Do you have any sense of likelihood of receiving a grant and how much it would be?
I don't know if we'll get the full $6 million. That's what we asked for, but I do believe we'll get something from either Senator Coons or Senator Carper's office. We won't know until the federal budget's actually passed, because you know sometimes they prolong it and they kick the can down the road until about Christmas. And then all of a sudden they come up with a solution and they solve it. So
Right.
we'll keep our fingers crossed and we'll see what happens.
Great. Other questions from the committee? In terms of revenue for the year, on track so far? Still ahead of schedule?
So our finances for 2022, Sheena is still putting them together. We had to have our April meeting actually on the 8th of this month instead of on the tomorrow, because tomorrow being a state and county holiday. So our financials are not complete, but I'm sure Sheena can provide some update. We are in good financial state. Sheena?
We're right where I predicted we'd be, right about as far as surplus for the year, which is really nice. And the revenues coming in so far are right about where we were last year, about this time for April.
Great.
So, I mean, transfer tax isn't going to be what it's been the past 2 years, but where it was about 50,000, so that's not too bad.
And one other thing I'd like to mention, Brian, is as of April 1st, the hotel tax went up to 2% from 1.5. So that will be something extra that we did not have last year, going from 1.5 to 2%.
How does that revenue compare to, like, yes, last year was kind of a bumper crop for transfer tax. How does the revenue coming in from the hotel tax compare?
Last year we started on July 1st, was it, Sheena? So we really don't have anything to compare with right now. But I'm sorry, Sheena, go ahead.
We got in double what we predicted. We had budgeted for 100,000 and we got in almost 200,000.
Oh my gosh, that's great.
So it should, we've taken that into consideration for this next year.
Great. Excellent. Okay. Any other questions, comments from the committee?
Real estate is still pretty strong though, right? So this should be a pretty good year for transfer taxes, right?
It would be nice, but I'm not looking at another $1.5 million in transfer taxes this year.
Okay.
And we budgeted, Sheena, what's 735,000 this year in our budget, or 750?
Right about that, yes.
Okay.
Fewer transfers of property, but higher prices. So hopefully we will hit the mark. Okay. Any other questions from the committee? Other comments?
No.
Commissioner Givings, we don't mean to stifle you. If you have questions or comments as well, we welcome them.
I just want to comment that there's only so much real estate that we can sell. And once everybody's gotten settled, then it'll take a little bit while before people buy again. So yes, the more expensive ones will stay longer, but last I checked, there weren't very many on the market.
Okay. Let's see. I think the next item on our agenda is up to Dominic for review of the portfolio.
Sure. Well, good evening, everyone. Can everyone hear me okay?
Yep.
Great. All right, so why don't I share the screen now? Okay, so go kind of through all the accounts kind of as we do on a typical basis, and then kind of go through kind of just some high level overview of the market and kind of where we see things. As you all are well aware, there's a lot going on in the world today, and certainly the markets have been quite volatile over the first quarter, and we're obviously working through that. But I think overall the exposure in the portfolio is it's relatively good. I mean, we certainly are able to weather that storm and kind of maintain our long-term focus. So even though we've had volatility, we think we're still well positioned based on kind of the mandate that we have so far with the holdings in the portfolio. So this is as of 3/31. Portfolio kind of all in was 6.6 million, just over 6.6 million as of 3/31. We break that down into why is my thing not working? There we go. So we have the two accounts. So we have the two short-term accounts, which are essentially just fixed income and cash, and then the long-term account, which has a bit more diversification with the equity portion of the portfolio. As we look at kind of overall kind of long-term performance, up 3.9% annualized relative to kind of the blended benchmark of 3.7%. So still kind of beating on a long-term basis. I would say the quarter certainly was an underperformer slightly, 5.4% relative to 4.7 for the blended benchmark. And I think that's a couple things. One, certainly equities underperformed the broader index, and fixed income is coming off of its worst quarter in 40 years as the Fed has begun its tapering of its balance sheet, and as we have certainly seen interest rates rise as the Fed is pricing in and another 6 interest rate hikes this year, which is certainly putting pressure on the bond market. That said, certainly the bond yields have risen quite dramatically, and we've seen that in the bond portfolio as well. Kind of already kind of bond portfolios already yielding over 3%. So although we saw had a tough quarter from a fixed income perspective, we still think overall bonds are becoming actually somewhat more attractive, given they're starting to yield more attractive, certainly more attractive yields. And so that kind of the differential between that, the equity risk premium, if you will, kind of the differential between kind of equity risk and fixed income, which had been historically kind of wide, is now starting to kind of decrease. And so we're actually starting to get a little bit more income from that fixed income portion. So although it was a tough quarter, it's a long year, and ultimately owning assets for a long-term with a long-term focus is our priority, and what our mandate is, and so we'll continue to do that. Overall, from a performance perspective, you can look down the right side and certainly see negatives, but that's only a quarter, only kind of looking at the short term. And so we always kind of like to keep our eyes focused on the long term. Long-term numbers still look good. I would say the small cap, kind of just on a timing perspective from investing in, at the end of last year, October of last year to now has been, an underperform. The entire market has lagged, and certainly there's a growth bias within this small cap portfolio, and small cap growth overall as interest rates have continued to rise, or certainly expectation of rising rates at the end of last year. puts pressure on kind of all growth stocks. And so we'll kind of manage through that. But overall, we've certainly seen an underperformance from growth stocks. But overall, and I would say, obviously a couple of things that are on, a lot of people's minds are, Russia and Ukraine. We don't have any exposure to Russia and Ukraine in the portfolio, so feel good about that. Obviously, the longer that war lasts, the more difficult it is to kind of rein in inflation. And so as we think about whether it's on the energy side or on the wheat side, good stat I heard the other day, 14% of the world's calories come from Ukraine, which is kind of an interesting stat. But just to think about the food supply and certainly the energy supply being restricted is certainly going to continue to put pressure on inflation. And if the last kind of core inflation numbers that we saw, obviously being led heavily by those components, so food and energy, but kind of ex-food and energy inflation for the first quarter actually started to tick down. So as we look at kind of bond markets and kind of the 10-year, kind of 2-year is now kind of is no longer kind of inverted, and so which is somewhat of a bullish sign. Certainly not saying I'm bullish to the market at any point here, but it is a better sign, and hopefully we are getting past kind of peak inflation, and interest rates, given the strength in the economy, can be absorbed. I wouldn't say easily, but can be absorbed. Given the if you look at the demand and labor challenges, but we still continue to see robust growth here domestically. We still see a healthy healthy consumer and a healthy workforce. I mean, if you look at the right side chart here, that purple line is labor force participation. So we're not back to where we were kind of pre-pandemic, but certainly kind of on the right track. Unemployment rate is about where it was pre-pandemic. So people are coming back into the market. There are, historic a number of kind of job openings out there. And so it's certainly, certainly shows that the demand is out there, and companies are desperate for employers, in kind of all levels of employment. And so definitely we think the economy is still in a really kind of good place today. Obviously inflation continues to be kind of at the forefront of everyone's mind. I've heard it already once here on this call from Bill. And it's something we're obviously keeping a close eye on. I mean, there's nothing we can do particularly outside of maybe making some investment changes in the portfolio, which we can certainly talk about. But it's going to likely be, as long as that war is lasting, and by all accounts, there's a good article in the Wall Street Journal this morning, talking about just the fact that, and basically NATO countries, including the United States, has been training that Ukrainian army for this war for the last 8 to 10 years. And so they are well prepared, not only from an ammunition standpoint, but from a tactical standpoint, and from just an experience standpoint in how to fight urban warfare and be very successful. They know their enemy very well, and certainly know how to combat that army. And so it's going to last a long time, as long as Putin continues to push ahead. The Ukrainian army is going to defend its land as they should, and so that's going to continue to put pressure on the rest of the globe. We'll see kind of here domestically what happens with energy prices, but certainly definitely, obviously, there's a lot of debate around how to do that here domestically. And there's a lot of opinions around that. I wouldn't say we have an opinion one way or another, but need to focus on making sure that we have supply of energy, as the energy transition to renewables is going to take a long time, and we need to focus on kind of that domestic supply. So How we do that is up to certainly the experts in energy field, not me, but we will continue to keep a close eye on that. And if opportunities present themselves, we'll certainly take advantage of that. Yeah, I mean, I think this is just another good thing here to talk about. Just kind of the broader kind of commodity space and kind of what other concerns are out there. I think one of the things that does not get talked about enough in this entire environment is the focus on semiconductors. Certainly everything we do and everything we do here today, right? The amount of semiconductors that are on this call right now and all the computers that we're zooming in from the camera to the computer to just about everything on us today has some sort of chip in it. And most know that most of those chips come from, Taiwan is certainly one of the largest producers of semiconductors. A lot of the gases that go into them semiconductors actually come out of Ukraine. And so there's certainly those commodities, those finite commodities that go into those come out of these countries. And so there's certainly a lot of, I would say a lot of thinking around how to strategically position going forward that, certainly bringing that more in domestically, the semiconductor space. And so you're hearing a lot of talk around that. You're hearing Intel, NVIDIA, a lot of these other chip manufacturers trying to really bring that back here to the United States. So of all things, that's probably the biggest thing that you'll see kind of onshoring over the next few years is the semiconductors coming into the United States. If we want to continue and the world wants to continue to progress from a technological standpoint, they need to kind of own the production of semiconductors. And so that's certainly one of the underlying or underpinning things here that doesn't get talked about in this war, and certainly affecting some of the inflation. As supply chains, still continue to be disrupted, the lockdown in Shanghai, coming out of China, and certainly that's putting pressure on inflation. And as long as the pandemic is still out there, I think here in the United States we're in a really good place. But certainly if a country like China is going to lock down one of their largest cities in Shanghai and not allow people to go to the factories to produce the products that get shipped to the United States and other countries, that's going to continue to put pressure on all the supply chains. So, but I think at the end of the day, as we think about the space and about kind of the overall overall economy, and we had our team from our large cap sustainable growth portfolio, our 2 portfolio managers, talking to us at our morning meeting today, and I think we reiterate. Sorry, my dog is trying to come give me some cuddles. As we as we look at and make investment decisions, our managers are focused on always on bottoms up, right? They're not talking about the macro. They're not talking about what's happening in Russia or Ukraine. They're focused on can companies, right? Do they have, are they positioned well? Do they have pricing power? Do they have a moat around their business that can allow them to pass on prices to consumers? And how do they stack up against their competition, and what competitive advantage do they have? And at the end of the day, that's the investment decisions we're making. All the macro is going to be there, but our managers are focused on the bottoms up, on a company by company basis, and making investment decisions from that perspective. Yeah, I mean, I guess I think it's important to at least kind of mention, of the last, was it 16 recessions, 12 have come, or out of the last 16 rate hike cycles, 12 have ended in a recession, and so the Fed has certainly pushed things into recession. The Fed has a daunting job to try to thread the needle to kind of come in with a soft landing in this interest rate hiking cycle. They need to raise interest rates. Raising interest rates definitely slows things down. It's certainly slowing down to an earlier comment around real estate. It is slowing the real estate market down. Going from a 3.25% 30-year mortgage rate to 5.25% in a matter of a year, if that doesn't put pressure on things, I don't know what will. That has since come down a bit, but still, that's on a $450,000 home. that's a, $300-400 a month more just in interest. And so that definitely is making people question whether or not to buy a house in this particular market. And so we certainly think that the housing and home builders are going to have a tough go here in the next year. But everything we can tell is the Fed looking to make this interest rate hikes kind of this year, and kind of we're likely to see a 50 basis point hike at the next Fed meeting, and probably have all the hikes we're going to see this year. Whether or not they get to that end point, I would be shocked, I think, if they get to that kind of 6 or 7 interest rate hikes that they're talking about by the end of the year. But if they do, where do we end up at the end of that? I think that's the big open question, to see how they're going to play it. So we'll keep an eye out and keep close ties with what's going on from the Fed. But we have to just continue to control what we can control, and that's just investing in good, high quality companies. With that, I mean, there's more in here certainly that we can talk about, but open it up for questions.
Thanks, Dominic. I'll start, I guess, with kind of a high level overview type question of, is there anything to change in terms of the portfolio allocation, or is it just steady course? Can't control the macro, as you said. Still like the bottoms up selection of these companies and indices that we've got in the portfolio?
Yeah, I mean, I think the only thing that I would likely change is what we're doing is we're adding to kind of some core infrastructure. So on the global equity side, kind of going a little bit overweight, kind of global equities. Core infrastructure. Think of and I think there's a slide in here that kind of talks about it. Thought there was. But just kind of think about toll roads and here we go. So utilities, transportation, some energy, and we have a fund, Lazard Infrastructure, Global Infrastructure funds that overall we think can kind of beat inflation over this period of time, and it would be more of a short term, I would say, allocation, but at least we can maybe be a little additive when the rest of the market is volatile and have a little bit of a buffer from the inflationary side. So that's something that we've been kind of adding to portfolios kind of little by little here this year. But that would be kind of the only thing I would say at this point that I would recommend changing. I mean, overall, well positioned. I mean, although we had a rough 3-4 months in the bond market, I still think overall bonds are starting to come back. They're actually looking a little bit more attractive, as I was saying earlier. So I don't think we do any type of course correction here. I think if anything, just kind of make some small changes, maybe just add that manager, trim from kind of just trim from the other equities in the portfolio, and add a 2-3% position to Lazard. But that's all I would do at this point. There's just too many unknowns at this point in time to make any type of kind of sharp course correction.
Okay. Of the major holdings, it looked like the one area where we're sort of lagging is small cap, which doesn't have a long track record to really look at, but are still satisfied with that selection?
Yeah, I mean, it's always a tough thing, right? You add a new manager in, and the timing of it is the timing of it, and you can't control the timing. And so, still like the manager. I love the names in the portfolio. I don't. There's nothing to do. It's just timing is ultimately everything in investing, and sometimes the timing takes a little while to kind of get back. Where you're going from a growth market to somewhat of a value market, and so the sentiment within the market is changing. The idea here was to kind of have more of a core holding, so we didn't have to kind of toggle between growth and value. And certainly it's performed better than the growth index, but underperformed the value index. So I think we continue to hold They've got a long track, they've got a good 5-year track record, producing significant alpha above their benchmark. And so I'm fine kind of holding tight for now.
I do have some other questions related to the next topic on our agenda, which is changing the investment mandate altogether. But before we turn to that, let's see if anybody else on the committee has questions about the general portfolio overview.
No, not here.
Jimmy, any questions?
No, I don't.
Okay, Commissioner Gibbons. All right, well, you've silenced the masses, Dominic. We appreciate the overview. My view is it's generally still performing quite well. You're generally surpassing the benchmarks, so I think the performance looks solid. It's a pretty tough market, and I think everybody here who has any investments or retirement investments knows it all too well. But I think we're doing just fine. I think the next topic on the agenda, Dominic, we'd appreciate your insights as well, because it's something that we did talk about last time. I'm just pulling it up on my own screen.
Do you want to stop sharing? You can share.
Yeah, yep. So I think the next issue, and if I can get it up on my screen. So we had talked about.
Yeah. Okay. No, go ahead. Sorry, you're going.
We had talked last time about potentially expanding the investment mandate to allow in the short-term portfolio some measure of equity securities, sort of a modest kind of adrenaline or boost to that portfolio. And then on the long-term portfolio, we had talked about the possibility of some less liquid or illiquid assets as a small percentage of the portfolio. You had mentioned like a real estate fund that would be deemed illiquid. So I guess opening it up to the committee for discussion is what to do about this. Should we go ahead and make a proposal for those changes? We've had another 3 months of experience with pretty high inflation or hyperinflation, a pretty volatile market. I'm not sure any one particular investment category is going to be the cure-all for anything. It may be beneficial to be more diversified and still pursue that course of allowing the infiltration of some equities into the short-term portfolio and illiquids into the long-term portfolio. So I pose it as 2 questions to the committee. One is, do we want to propose that as a general matter? And then the second related issue is, assuming we do want to pursue that course, I think we need to take a look at Chapter 24 in the town code, because by my reading, I'm not sure we can make these changes to the implementation plan. I think we would have to have the council first change Chapter 24 to expand the allowable investments, and then we could follow with an implementation plan that then allows those kinds of investments in. So the first question again is, should we do this? Should we make this recommendation to expand the mandate? And I do pose that to Dominic as well. From an investment philosophy standpoint, is that prudent? And for the committee, is that the type of risk that we would recommend that the town take?
I'm happy to start.
Sure.
I'm happy to start. I will just, I'll first just start by saying that, these illiquid investments are becoming kind of, I would say, more prominent in the market. So if you think about, we had originally invested with Blackstone's Real Estate Investment Trust, which is a illiquid, a lot of notoriety around it. They've had a lot of inflows. They a lot of new assets into that fund. I would say we've kind of halted on adding any new assets to that particular strategy. We've just onboarded Starwood, has a similar structure. Not Starwood, the hotels, but they initially were one and separated about 25 years ago. And but more kind of industrial multifamily, very similar structured, 1099 kind of reporting, 1 year lockup with monthly liquidity thereafter. So pretty attractive from a liquidity standpoint. Average yield about 5% with a kind of a target kind of 8 to 10% kind of net IRR, internal rate of return. And so kind of, pretty attractive from that perspective, in what was a pretty low yielding environment. But if you think about kind of the inflation protection of a lot of those multifamily kind of and industrials, as they can kind of raise, pass that price on, and to kind of maintain that, that yield profile, which is certainly inflation protection. So that's out there. We certainly are bringing on new, there's quite a few out there. Blackstone has a credit, private credit fund that's similar called BCRED that we're looking closely at. There's a private equity, there's some private equity shops that are also doing something similar. So kind of getting, really kind of core private equity, but in this type of a structure. So you're not locking your money up for 10 years, 10 to 12 years. You're doing it in a way that's attractive to most investors. So the risk and kind of the profile is slightly changing as a lot of these private investments are gaining more, there's more liquidity out there, and the market is kind of changing on the private side. So that it's just to say that there's more options on the private kind of more illiquid side of investments. But just thought I would kind of share that as that's changed a little bit since the last time we talked.
Yeah, I mean, I'm familiar with the Starwood fund, or Starwood, I guess it's an investment company. I mean, that's a liquid investment. I mean, it may have underlying illiquid holdings, but Starwood itself is highly liquid. I mean, it readily.
It's a real estate investment trust. So I mean, it is technically I mean, Starwood in and of itself, the hotel is a stock that trades on on
right,
the exchange.
But Starwood, the REIT, is it trades on the exchange. It's open to retail investors.
This one is not. This particular structure is not. So it is a limited partnership whereby you would to do some paperwork and kind of go through that process. And so it is a different structure than that kind of liquid REIT. Liquid REITs tend to kind of trade with the equity market, and you don't really get that kind of diversification. They're just very highly correlated to kind of the rest of the equity market. And so we don't see a ton of advantage in the kind of the publicly traded REIT side of things. So we like the really focusing on kind of the private side where we think there's just kind of more upside and kind of better terms kind of all around. So
okay, because I just looked it up. I mean, there is Starwood Property Trust, which trades on
that is the hotel side. So that's going to be that's on the hotel side.
So are we talking about expanding the ability to put more equities into the long-term funds, or are we talking about trying to invest our short-term funds into something that earns more than the cash it's in? I'm just kind of wondering what direction are we trying to do? So before you answer that, I mean, my thought is that in the long-term funds that we have, I can see us investing a little bit more into maybe ETFs that gives us some steady income, a little bit better than what we currently have, putting in something safe. And it may not keep up with inflation, but at least then it expands on the percentage that we're able to invest into equities was one thought. And then and if we're on the short term, I don't know whether, I mean, will it make a difference? Do we, I think it probably will, to put it into something, that earns some money. But so I'm just kind of wondering, are we focusing on, one or the other first, the long term or the short term? Are we talking about both, I guess, Brian?
Yeah, why don't I share my screen, I can pull up the red line version of the investment policy. Okay, hopefully everybody can see that. So the changes that we had talked about last time, which I tried to incorporate in this draft for consideration. So this is the short-term part that you can see on the screen. And let me just walk through the changes, and then we can discuss the merits, just so you can understand or follow along with with what these red lines are. So you can see right up here, I just inserted target allocation. I think that is all along what this column was referring to get to 100% target allocation. So I just put the words there so we know what we're talking about. The second column is the range that is really the mandate to Dominic that tells him how much can you invest, what percentage of that portfolio can you invest in this category. And originally, this, you can see on this line, if you look at the black part of it, what it used to say is 0% for equities. So for the short term, this proposal is to expand the target allocation to 5% of equities with a range allowable of 0 to 10, as opposed to 0, which is what it was before. Everything, the fixed income, no change, unless we, as we discuss here today, think it should be different. What I proposed for the change here is to reduce the cash to allow for more equities. So hence the range shifted from a target allocation of 40% down to 35% of cash. And then the range allowable to Dominic would correspondingly also shrink slightly to tell him you should generally get a little less cash and a little more equities. Then in the allowable assets description, you can see we didn't have equities in the short-term portfolio before, so I added in what we would propose for allowable equities in the short-term portfolio. And it's not all equities, it's some equities. So the description here that I permitted for, suggested for the short-term portfolio is basically large cap stocks or funds, ETFs, mutual funds, that sort of thing. You can see in the second bullet, further description here, it shall be limited to large cap. In other words, this is the short-term portfolio. It should be very low risk. So I purposefully in this definition restricted it to the large cap universe. Things that trade on US exchanges to exclude foreign issues. And market cap is generally supposed to be in the range of the S&P 500. And for point of reference, I think the S&P 500 ranges from $6 billion up to $2 trillion. So it's a pretty big range of sizes of companies, but it would exclude, smaller companies. And then the last point here, C, that the company should generally be value oriented. Value is a little bit of a squishy term, but I think investment professionals like Dominic understand what it means. But generally, things that look stable and potentially income producing, as opposed to higher risk growth style companies. So that's the short term component. The major change here again would be to allow equities into the portfolio where they did not exist before.
So when we need to draw on this short term, is there an order of how we draw on this? I'm not familiar. Like if we needed to pull out cash more than just what's in cash, is there some kind of definition of how it gets pulled out?
Not to my knowledge. I would have to defer to Sheena or Bill. But there is cash in the Fulton County Bank account, which is really for daily operation.
Right.
So if we were to, if the town were to need to liquidate part of the short-term portfolio, you could certainly liquidate and tilt toward cash if you wanted, but that would change the, the proportional allocation, if you will. Because you can see in that second or first column, I guess it's the second column, the target allocation column in the middle here. Dominic's mandate is to try to invest, with that target in mind, within the ranges in the next column. So if you were to draw down all the cash, you would cause the portfolio to be out of balance with that allocation. So I think as a practical matter, if the town needed to draw money out of the short-term account, they would probably do it on a pro rata basis.
Mm-hmm.
But
Okay.
I would defer to Sheena if you have a different view.
In my opinion, if it comes to the point that we got to start liquidating from that fund based on what's in our Fulton fund, then we got bigger issues.
Fair enough.
Okay. Well, it seems to me that then 5% or 0-10% is not that big a risk here, right?
No, and I mean, this is what we had discussed in our last quarterly meeting, that we wanted to, or I think the group agreed that we felt it was appropriate to allow some equities into the portfolio as long as they were pretty limited.
Yeah.
Now, I don't think we got so granular last meeting to come up with the range of precisely what it could be. So this is, my proposal for everybody's consideration. But, I think even if you had a catastrophic event in your equities and they made up 5% of the portfolio, you can imagine that has not a humongous impact on the portfolio.
Right.
At worst, it's, if everything went to zero, it's 5% of the portfolio.
Yeah.
So I think it's a pretty conservative approach, but it gives you an opportunity to get some returns that maybe, they're certainly different from, and, you hope that they are better than bonds, but as Dominic discussed earlier, the bond market with interest rates rising may have better returns. But of course, he would still have a mandate that allows a range of 0 to 10. So if you felt that fixed income was the better bet, you could just ratchet down the equities down to 0.
Right.
But this gives him flexibility.
Yeah, my view is that this looks like a reasonable plan, and ranges seem pretty conservative to me, and I think your definition of the type of equities is good.
Yeah.
So why don't we? I'm sorry.
Brian, just real quick, on the cash side here, I know just thinking about kind of, again, adding a little bit more, what's the most, can I buy 3 month or 1 month T-bills here? I would assume 1 month certainly is considered cash or cash equivalent. Is there a definition in here for cash?
So you can see the next bullet down, short-term, highly marketable securities, such as treasury bills.
So no more than 3 months.
Yeah.
Okay. Well, I think that's another thing that we're going to do here with this cash is look to add to the 3 month T-bills. At 75 basis points, it's better than nothing. And that's a recent phenomenon, right? Like that hasn't been there and hasn't really been an option. So I think it might make sense to add that in place of cash. And as rates go, we'll roll as rates go up, we'll roll those 3 month T-bills and hopefully get a little bit more yield out of the cash piece of the portfolio.
Okay.
Yeah. Good.
I think a related question then is the cash portion of the portfolio still too large? Should it be a wider range or allow more fixed income instead of just cash? What is your experience, Dominic, with similarly situated clients?
It's a lot of cash. This feels like I don't want to use the term, but a doomsday kind of scenario portfolio, right? Like if everything else has been broken and used up, and there's a really dire situation within the town, that's really the only way that the town would tap this portfolio. So for that case, it feels like a pretty heavy number. I mean, I think a 10 to 20% is more than enough. I mean, most organizations kind of have a 5 to 10% allocation, so it is a larger number. But at least until that decision is made, let's try to at least kind of get the most we can out of the cash portion until that's changed by the town. Kind of my thought.
So I think that's a question for the committee right now, as we are getting ready to recommend some changes to this plan. Should we change so are you suggesting the target allocation is itself too high? It's currently at 40%. And we should maybe drop that down to as low as, sounds like about 10 to 20% is your typical experience.
Yeah, and the other thing I guess then too is it's what's the right number in this, the general fund and the beach replenishment short term, right? Like what's the real number? I mean, can it be moved to the long-term fund where you have a different mandate and keep a smaller portion in these short-term portfolios? It's kind of like what is the right amount? I don't know that I've ever heard anyone kind of say like this is the exact amount we need to have in the short-term portfolio. I know there's been talk about combining the short and long-term. So I don't know. That's just another question before, as you're thinking about what is that right number? What's the right amount?
Yeah, I think, at risk of passing the buck, I mean, I've raised this question before, and in a perfect world, I mean, if I were king of the world, I would get rid of all these different accounts and I would just combine them. But we have been told several times from the council that the beach replenishment fund has to remain separate. I suppose unless there were some action from the council itself. And that if you look at chapter 24, there are short-term components and long-term components. So we have to keep them separate as well. I mean, I don't think that's efficient, but it is what it is.
Yeah. Yeah.
I mean, open it to the committee. I mean, I'm certainly comfortable reducing the cash unless Sheena or Bill tells us that there is some reason that we need to keep excess cash in this account, given that we have the Fulton County Bank cash account. I mean, is the town able to manage all its operations day by day just with what's in Fulton County? And if that's the case, then this really is kind of a further backstop and maybe doesn't need to be in the most liquid cash, because every security in here is highly liquid, could be liquidated on one day's notice. Even if we put equities, they're going to be liquid. They just may have some more volatility to them. But we're talking large caps, there shouldn't be even much volatility there.
Yeah, I mean, with the way you define equities, which looks like a pretty safe definition, I'm okay to move a lot more a much lower percentage on cash and a higher percentage on equities. So I'll make a suggestion. How about 20% on cash and move that whole amount 15% up to equities and make that 20%? Because I mean, that way at least we're going to try and make some money on it. And Brian, what you define here, I mean, this is very safe things that how you're defining what's being put in there, right? I mean, if it was like equity, like just general equities, and Dominic can go crazy on investing in whatever he wants, so that's a different story. But I think your definitions are good, and if this is my personal account, I probably would put even more cash, up in equities. But I'm just saying, for the town, I think 20% on equities and then 20% on cash is how we split it, and then keep 60 on fixed income.
I think that sounds reasonable, Jimmy.
Okay. Bernie, any thoughts?
What I was thinking about was our discussion last meeting about the contingency fund. Does that have any play here?
The contingency fund.
For the town. They talked about having a 6-month contingency fund. We had a discussion
Oh,
talking
the rainy
about-
day fund.
Yeah, rainy day fund.
Yeah, so that was, just looking back on my notes. It's a 6-month rainy day fund, $1.8 million.
Right.
It jumps up close to 2 million with the new budget, but we've still got that in Fulton.
So we
Okay.
already have, we
Okay.
already have sufficient assets in just Fulton.
That,
to
yeah,
cover
that was my only concern. As long as we're good there, I like this approach.
Okay.
Sheena, I thought that it was 2.25 for the rainy day fund. Or did we adjust it and I missed that in my notes?
I have to look at the numbers exactly, but it is the expenses prior to the set aside.
Okay.
And when I had done the original numbers a month or so ago, I had done them after the set aside. So I just have to, I can get you the exact number, but it's, it's
And I'm
less
looking,
than-
the dates on my notes is January, so I probably have old information here, but I just wanted to make sure. And since I'm stepped in here, at this point, beach replenishment fund is something that is specified within the town charter and money specifically goes to. And in order to not have that fund, which I would really like us to not have that fund because we don't need it, because other people are going to replenish the beaches and we don't have to pay for it, but we would have to go through a referendum to change that. And I'm not opposed to the investment committee or the budget committee or whoever bringing that forward as a proposal.
I don't think it would come from us, perhaps from the budget committee. I mean, as a town taxpayer, I suppose, I think of it as it's a tax, and it is designated as a tax for beach replenishment. So I would agree it has to go to referendum. I'd vote for the change. But I've stated before and stand by it that, there really is no tax base. We don't have income tax. There's no sales tax. The town depends on a pretty limited selection of taxes, namely transfer tax and enforcement and things like that. But I mean, I as a taxpayer, I'd love to see the beach replenishment tax just changed into a general fund tax so the town has revenue and can pay for things that are clearly coming up the pike. But we don't need it for the beach, to Commissioner Gibbings' point. We probably do need it for things like fixing City Hall or replacing it. So in any event, I don't think that recommendation would come from the investment committee, but I'd love to see it.
Yeah, my understanding is the beach replenishment would be taken care of by federal, followed by county before it comes to us.
Yeah, and I read in the Cape Gazette that the next beach replenishment is scheduled and the state is paying for it.
Mhm.
So proof in the pudding that we probably don't need that account.
I mean, we do need the account, but we don't need it for that purpose.
Right.
I don't want the money to go away. I just
Yeah.
want to.
Because as I understand it, there's always the threat of Corps of Engineers or the state saying, sorry, guys, you're a problem. So it's a contingency we need to plan for. So-
However, the other beach towns are not.
Well, that's them. We live and die by our beach.
As
Well,
the
I do
chair has
agree with
said, it
shifting
needs to
the
be
tax.
another committee.
I do agree with Brian saying, do we have enough now? We're good.
I mean, I don't know what the solution is to it. I think that's perhaps a budget committee question. Investment, that's not the investment committee's mandate to make recommendations for what to spend money or not to spend it on. We're just here to look at the investment portfolio.
And but I mean, Brian, as it relates to the investment portfolios, I mean, I think the one thing that we possibly could come out of this is just the fact of combining the short and long term, given that, any short-term replenishment would come from federal, state, or county beforehand. And this is really just a long-term focus on beach replenishment in the case that money is not there, over the next 5 or 10 years, that we have this long-term fund just for that you have this long-term fund just for beach replenishment. To segment it in short, long doesn't seem to make a whole lot of sense in this case.
Right. I think that may be a chapter 24 town code
Right.
issue for how it's defined. I mean, as I understand it, we're stuck with this from the investment committee. This is what we're handed, and we do our best to make recommendations to Dominic for how to invest the money and defer to his expertise. But I hear you. I would love to just combine these accounts.
Yeah, we've talked about that probably well over a year. Maybe probably 2 years about the potential to combine the two funds.
And would I be correct that the investment committee could make such a recommendation to town commissioners who could then vote to make changes to chapter 24?
I think, again, that's probably a budget committee question because
We're back to
money
budget
is-
committee again.
Yeah, I
Okay.
mean, I think it's allocated by town code that way. So, I mean, we obviously have an opinion on how you should invest the money once you tell us it's in the accounts, but we don't get to decide. And I don't think it's really our province to make the recommendation to tell you, you shouldn't have the accounts or you shouldn't budget the way you budgeted. So I would defer to the budget committee, and I would absolutely support that change, but I don't think it would come from us.
Okay. When I give my report at the next meeting, I get to say these things.
Great. We appreciate it.
Mhm.
So am I hearing from the committee a 20-60-20 split in the equities, fixed income, cash components of the short term?
I think so.
Yeah, that's what I'm saying.
Okay. So I can make corresponding adjustments to this draft for the ranges. Let's see, if we're looking at a target range of 20, I think the equities then would go 0 to, do we want to cap it at something, cap it at 30?
Yeah, let's cap it at 30.
All right, so we'll say 0 to 30 range. We'll keep the fixed income at 40 to 80. And the cash will be, shall we keep a minimum of 10 cash,
Yeah, 10 to 30.
10 to 30? Okay. Let's move on to the long term, and then we can set this up for a vote at the end. So on the long-term component, I guess there is a long-term beach replenishment component.
Mhm.
So this has, again, I did the same thing here. I just put in the words target allocation because I think that's what this column was intended to be. The equities were at 25. I changed it to 30. The fixed income was at 75. I reduced that to 70. And you can see correspondingly, I shifted the range. The definition of equities for the long-term component is a little bit different in that it includes everything defined above, which I think are the most conservative equities, but it gives a little bit more flexibility for the types of equities that can go into the portfolio. These definitions really haven't changed in this middle part. Because you can see right here, it would allow small and mid cap, which was not allowed before in the short term. And it would allow international, which was not allowed for the definition up above for the short term. I have also added in what we discussed last time, which is the possibility of having some illiquid securities in the portfolio. And the definition is there for your consumption. I proposed, I think, based on our conversation from last quarter, that at the time of purchase, it should not be more than 10% of the portfolio. And that you can see the definition that it is intended to fit into the buckets, not to change the allocations. In other words, if you're maxed out at a range of 45% for equities, you can't use this to go over the 45%. That's the gist of what this is trying to say. It also makes clear, you can see the bottom portion here, that if, for example, Dominic were to recommend real estate investments, he could invest in a REIT, but he can't invest in a single piece of property. He can't go out and buy real property. It's got to be a diversified fund that holds multiple assets. Did I put a number in here? Yeah, I did. The very last sentence, in case there's any doubt, a diversified fund would be one that has at least 10 different holdings in it. So you can't pick a super concentrated fund, but you could pick something that's got at least 10 holdings in it. So that would address that part of the discussion. I don't think there was any other change to these. I think, well, let's put this up for discussion before I go to chapter 24, which then we can probably cut Dominic loose. But I think chapter 24 may be tying our hands on this, and we may need to make a recommendation for a change to that first before we can implement these changes to the investment plan, implementation plan.
Brian, can you move it up to the percentages again?
Yep.
Thanks.
So question again to Dominic, I think first is, in your experience with similarly situated clients, are these ranges suitable, or are they themselves too tight? Are we too far weighted into fixed income, or does this make sense for a town?
Yeah, I mean, okay, I think it makes sense. I don't think getting over your ski tips as far as risk. I think obviously there's you have to not only manage the town's money, but public perception as well. And so you want to make sure that your town remains conservative, and I think that's a fair thing to do. I think the one thing I see here is would it be prudent to add a target for real estate if if you were to add that section below. Typically we do see kind of an allocation kind of for real assets, if you will,
Okay.
in the asset allocations. That's the only thing I would maybe a 5% allocation with a kind of 0 to 10 range might make sense here. Otherwise, I think the language is fine from our perspective, and I think aligns with what we had proposed and kind of what we're thinking still today.
Okay. So I think based on, and I think that's a good suggestion from Dominic, I think what I would propose then is maybe we leave the equities at target of 25 and take that extra 5 and put it into real assets.
Mm-hmm.
So let's open it up to the other committee members.
So you're not considering the REITs as partly in the equities portfolio? You're going to separate that out and call that a separate line item? Is that what you're suggesting?
Yes. I mean, we don't think about kind of what we would think of in this particular bucket. If we were going to buy kind of a publicly traded REIT, that would be kind of one thing. This, it's not our recommendation. Our recommendation would be to use kind of private real estate. Private real estate just happens to have a new structure that they now are, Blackstone kind of started that trend, and now a lot of the other larger ones are kind of continuing on. It's a lot better liquidity terms, but you get access to kind of the high quality kind of private kind of portfolio of properties, and so that we think of as owning actual real assets and owning the real estate in and of itself.
And so the way it's worded now, that wouldn't fall into equities and obviously not fixed income. So you're saying that it really wouldn't be in the equities category.
That's correct. It would be a different asset class. It would be a separate asset class. And we have been kind of funding kind of our allocation of real estate out of fixed income
Right.
as a diversifier.
I'm okay with it, but from a perception standpoint, it seems like we're creating a specific line item that seems awfully specific. I don't know. I'm okay either way.
Well-
I'm just saying, it just looks like we're creating a separate line item, and
Yeah, and you can see for the definition I propose down here, the red lines. I mean, I characterize it as illiquid securities, whether characterized as equities or fixed income, so that it could come out of either bucket.
Right.
I mean, a REIT is going to be an equity, although its underlying holdings will probably include a fair amount of debt.
all right. I don't know. I guess this, I don't know, this kind of, to me, really changes the look of that long-term investment category in terms of percentage. I'm okay. I'm just saying it just creates some attention, to someone
Yeah.
looking at it, to say like, hey, what's this new one that's, that the committee is doing?
Yeah,
I
I
mean-
agree. I agree with Jimmy, because to me, if it's in definition, it's allowable and it's a good thing. You have the range to move funds there as needed. It gives us the best return on our investment. So, but like Jimmy, yeah, I'm okay with it.
Yeah.
Yeah, I mean, what I have here proposed, prior to Dominic's comment, is to leave it as is. It allows you to draw from either bucket,
Mhm.
and it caps it at a total of 10% of the portfolio. And it also, you'll notice in the middle here, I had capped it at 5% for non-publicly traded. So if we went with a private fund, Dominic at the time of purchase would be capped at 5%. Now, that's not set in stone. That was just what I put on paper.
Yeah.
I mean, I'm okay with this whole description of how we're, characterizing it. I would rather just leave the stated percentages alone, and then have the right to be able to draw it from and put it in, from equities or fixed income.
Okay. Fine by,
I mean, to
fine by
me,
me.
I think it's a perception thing, because not that anybody's probably paying attention to this anyway, but I just don't want it to someone focusing in too much on the fact that we're changing these percentages between what sounds like the two, long.
Yeah, I mean, to Jimmy's point, I recall talking with former Commissioner Moskowitz, and he regaled me with a history of the town, that the town had been invested in some hedge fund or something to that
Yeah.
effect, and it upset certain
Yep.
people.
Yeah,
So
yeah.
I think to your point, this may help blunt that sort of criticism.
Yeah, I mean, that's when I came in back then, in the committee, because before that, there was a lot of cowboy investing.
Okay, so I think before we cut Dominic loose, is this, if we left this as is, as proposed here, that's something you're comfortable with and can work with? The
Yes,
mandates
it
make sense?
Yep, absolutely.
Okay. Unless there are any other questions for Dominic, I think you're welcome to stay, but I think we can let you go if you have better things to do with your evening.
What?
Well, it was good to see everyone. Thank you all. As always, good to see you, and hopefully, maybe we'll see each other in person sometime as this weather continues to warm. Be nice to
Hopefully
see
our
you all in
next
person.
meeting. Yeah,
Yeah.
hopefully our
Yeah.
next meeting might be in person.
That'd be great.
Thank
Fantastic.
you, Dominic. Much appreciate your
Absolutely.
time.
Thank
Of
you.
course. Bye-bye.
Thank you.
So I think the next question is chapter 24 and whether we can even do this. I think we can do the change to the long term. I don't think this is impacted by what chapter 24 says, but let me show you chapter 24. Let me go back to that. I can find it. I think it's this screen. That was Starwood. And I think this is chapter 24. Not sure. I can move this over. Okay. So this is chapter 24. So this is the town code, and the investment plan implementation plan that we were just looking at would implement this chapter 24. So here's what concerns me. Let's see. So this lays out the different accounts that we were talking about. The general fund is restricted. The beach fund is restricted to repairing the beach. But then you get down to item 3, allowable assets for investing in either fund for short-term to medium needs include cash, fixed income. It does not include equities. It's only until you get to allowable assets for meeting long-term needs do you get to the equities paragraph. So while I don't have any problem recommending that equities be available, I also think that how we have further defined them and specified things for Dominic in the mandate, I think is consistent with the, obviously somewhat shorter definition of equities per se. I'm concerned that chapter 24 doesn't even allow us to put equities in the short-term portfolio as we had been discussing last time and now this time. And if you all agree with that, then I think we first need to make a recommendation to the town that the council change chapter 24 to allow equities into the short-term portfolio, even if it were to specify some restriction like the one we are proposing.
Yeah, I agree with you, Brian. I don't think this says that we're allowed to put equities in short term. And I think that was probably the original concept, right, of what, from a long time ago or whenever this is developed.
Yeah, and I think, kind of to the earlier discussion about the beach replenishment fund, I mean, I almost feel like the short-term fund has kind of outstripped its purpose. It's become too big, and it exceeds the operating needs of the town. And hence we've got a bunch of money sitting in a short-term fund that we probably don't really need in a short-term fund, but for the fact that that's what's dictated by the town code. And, as long as we have all that money piled up in a short-term fund, it'd be nice to invest it in something else. But I think the town code has to be revised to allow that. So I suppose we have a couple options. We could vote on a recommendation to the town that chapter 24 be changed. And we could have that as option 1, and that's it. Option 2 would be recommend that chapter 24 be changed, and simultaneously we're recommending these changes to the implementation plan that would be triggered only if the town also first amends chapter 24. And I'm comfortable with option B because we've done the work and had the discussion on the implementation plan. So I would suggest we put them both up simultaneously. Recommendation to change chapter 24 and recommendation that they adopt changes in the implementation plan as proposed.
Yeah, I would agree with that. I mean, otherwise we're just dragging this on for a few more meetings and not make money on this cash.
Yep. Bernie?
No. Yeah, I agree, because we've been talking about this for a while now. I'll just put it that way.
Yeah, I mean, it has dragged on. Commissioner Gibbings, any further thoughts or comment on it?
Make sure I'm not muted. Okay. I think that presenting the logic of the need for revision to chapter 24 combined with the proposed revision to the investment plan is the most parsimonious way to go. I think they're linked. I don't think that they need to be separated by a month for consideration or whatever. I do know that the May meeting is likely going to be taken up by presentations regarding the town hall building. So
Okay.
if one of you could, I will get it on the agenda. And if one of you could succinctly cover the issues, then I think we can move forward quite easily.
Okay.
I
I'm
cannot speak
happy
how
to do
anybody
it,
else would
or,
vote, but that would be my advice to the committee.
okay. In order for us to make a recommendation for a change to chapter 24, do we need to propose language, or do we just tell the council, we think you need to change this?
Proposed language makes it easier because otherwise we start to wordsmith.
Okay, then in order to avoid even more grass growing under this, I think we need to come up with some language as a group that we can propose for a change to chapter 24, because I hadn't thought that far ahead.
But the fact that you thought of chapter 24 is actually, I'm impressed because I do a step and then realized there were 3 steps behind that I forgot to do. So.
Well, I guess lucky to have both documents in front of me at the same time and wondering, gee, where do we have to make the changes? So I think what I would propose.
So
for
Bryce,
the-
shouldn't we then have at least a motion and a vote here on our committee of our recommendation to propose, the changes and so forth, and then once we ourselves as a committee approve it, then the next step is then to change take a shot at changing the language of chapter 24.
Okay, I'm fine with that.
Okay,
Is
so
there a motion?
I'll make a motion that we
Is-
propose to the town council to change the language of chapter 24. And concurrently, also I propose to change the implementation plan that takes into account the changes in chapter 24.
As discussed today, because we will
As discussed today.
further modify that one.
Sorry, Brady, it's a long,
percentage.
it's a long motion.
Fighting fast here.
It's a long
Well, hopefully,
motion.
hopefully it
Let's keep
accomplishes
it
everything
going.
we need. I followed you, Jimmy. Is
Okay.
there a second for the motion?
I'll second it.
Okay, all in favor, say aye.
Aye.
It is unanimous. It has passed. So
Yes.
then our next order of business is to propose some language to chapter 24. I think the one area where we need to change it would be right here in 3, because it cuts off at cash and fixed income. So I think what we need to add in is a subparagraph C, which would allow equities. And I think we can perhaps take the definition.
I think you should just take the definitions in the long-term section, because it's pretty general and pretty all-encompassing, and just take that and put it up in the short-term one.
Okay, let me take a look at that again. Yeah, I think that's fair. We could do that. I guess then there would be no distinction between the two.
Right, and so it'll look identical so that we know that, it can be done in both areas.
I mean, I'm fine with that. The only other possibility would be to say, take the definition of equities from below, but restrict it to large cap and no internationals.
Okay,
That's effectively taking the definition that I had proposed up here for the short term.
yeah,
Which
to
would-
make it sound a little more safe, right? In terms
Yeah.
of what we're doing. Yeah.
Exactly. So we could take this paragraph right here, equities would be high quality common stocks or equivalents, as well as large cap stock mutual funds, ETFs, whether index based or actively managed. And I think rather than include all this detail down here for purposes of chapter 24, we could simply say excluding internationals. And
Okay.
call it a day.
Yeah, that's fine. That's fine with me.
Okay.
So I am requesting, with these changes, I'm requesting the mayor that the investment committee's proposal for modifications to chapter 24, specifically, or to include equities allowed for short-term investment and the resulting revision for the investment plan be included on the May agenda. We good?
Correct.
Okay.
And we will supply this precise language that's highlighted right here. That for the short-term component, the definition will be equities include high quality common stocks or equivalents, as well as large cap stock mutual funds or exchange traded fund ETFs, whether index based or actively managed, to exclude small caps. To exclude international and international equities. And then I think we can leave all this detail in the implementation plan that explains what a value investment is and the precise definition of large cap.
And we're gonna submit that at the same time to the council to look at, right?
Please.
Correct. Yep.
Good.
Yep. I can type it all up this evening and send it off to the town.
Perfect.
But it's this language on the screen that is highlighted, and then it'll be comma excluding international securities. And that way it conforms to what we have here. It would be large cap only. Is there a motion to approve that recommendation to the town?
Motion.
Do I hear a second?
I second.
All in favor, say aye.
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 And no dissents. It passes unanimously. Okay, we're done with that. Thank you, gentlemen. I think we made some progress. There are no other items on the agenda other than discussing meeting dates, but is there any other business that anyone on the committee wishes to discuss today?
No.
Okay. Commissioner Gibbings, anything else that you would like to discuss?
I feel really good about how this started and got pulled together, and I'm happy to present it on your behalf.
Great. We appreciate that. We appreciate your contributions today. I think we made a lot of progress. The next meeting dates, unless there is an objection, we'll stick with Thursdays, second Thursday of each quarter at 5 p.m. So that would make our next meeting, I believe, to be July 14th.
Mm-hmm.
So that would be Thursday. I anticipate that would be in person. We'll see.
Well, since that's my birthday, we'll celebrate afterwards.
Oh, fantastic.
And we have to meet in person so we can celebrate afterwards. Yes.
Yeah, we should definitely do that. That's great. Okay, I think that's all our business. I think our meeting is adjourned and the time is 6:33.
Yeah.
Thank you, everyone.